Okay, so for our next speaker, I would like to introduce Miss Cornelia Barnbrook from Berlin. Cornelia is our partner, Elvira Angel partner in Berlin, and has an independent office in Berlin. And she's experienced tax consulting and certified international tax consulting, which is a new certification, somewhat new in Germany and very specialized. So, Cornelia, please enlighten us.
So, good morning, ladies and gentlemen. As you heard already, my name is Cornelia Barnbrook, and I'm from Berlin. Does anybody heard of Berliner currywurst? Yeah. To make currywurst, I will explain. You take a fatty, unattractive fried sausage, cut it into little pieces, overflow it with watery ketchup, and then finally sprinkle it with some tasteless curry powder. So Berliners are very proud of their currywurst, indeed, and there are even fights about who invented it. So now compare currywurst to the slightly more famous and more delicious cuisines of France and Italy. I honestly have a client who gave up food from Italy and France and came to Berlin and our currywurst. So why would he do that? My client is an Italian citizen. He's a fashion designer and used to work and live in Paris. And anybody who knows anything about the fashion industry knows that Milan and Paris are the places to be. So why did he come to Berlin? Believe it or not, it's not because of the currywurst. It's because of our taxation system, and even this is a twist. So, how does it work? Okay, so first I would like to show you a comparison of the, just like this, of the tax rates. And I would like to explain to you the graph, but before we go into this, I want to say that the graph only shows tax rates, and the tax load of a corporation is not only determined by the tax rates, but also by the deductions. And we have no general rules in Europe for deductions. Every country has its own rules, and this makes comparison difficult. But let me say that Germany allows, in comparison, a rather wide range of deductions. So, as you can see here, the blue bar is the effective tax rate. In Germany, the effective, or let me say in Berlin, the effective tax rate is 30%. I will explain to you later why I used Berlin and not Germany. And as you can see, for example, in France and Italy, the effective tax rates of corporations are higher, but there are a lot of other countries where the tax rate is lower than in Germany. The next bar, the orange one, is the withholding tax rate for dividends. I think only France has a higher tax rate. No, also Israel, as you can see. The yellow one is interest. We have, in most cases, no withholding tax for interest payments. And the purple bar is the tax rate, withholding tax rate for royalties and payments for license fees. In general, it's 15% in Germany. You have, which is a rather good result, I would say, in comparison. So coming back to my client who moved from France to Germany, indeed the tax rate in France and Italy is a bit higher, but there are a lot of other countries with lower tax rates. So believe me, it's not the effective tax rate of a corporation that brought him to Germany. I would like to give you a common example. A corporation from Israel established a company in Germany. I would like to explain the structure. We have a parent company in Israel. It's a corporation, and it's owned by private shareholders that are resident in Israel. The subsidiary in Germany is in most cases a GmbH, as we heard already. It's the most common legal form for corporations in Germany. The parent company pays for the founding of the company in Germany and for the costs for the setup. The payments from the parent company to the subsidiary can be either loans or equity. As soon as the subsidiary gets to the break-even point, the parent company wants to get its money back, and these payments can be either dividend, interest payments for loans, or payments for the use of license fees or patents. So now the question is, what is the best alternative? On one hand, to give loans or equity, on the other side, to pay back dividends or interest payments or license fees. I would say there's no general solution, which means for you that we would have to find your individual solution for your company. And for finding this solution, we would have to consider not only the German tax law, but also the tax law in Israel. And this is where somebody like me and a counterpart in Israel, as Avira and Angel, comes in. So in reality, setting up a tax structure like this is much more complicated. But I just want to give you some examples. First, this slide shows taxation of profit of the subsidiary and of dividends in Germany. So just let me say something to the total tax rate of a corporation. In Germany, it includes a federal tax of 15%, then a small solidarity surcharge of 5.5%, and also municipal trade tax. And this trade tax rate ranges from 7% to 17.7%. In Berlin, it's 14%, which gives a total effective tax rate for a corporation in Berlin of 30%. So let me explain my example. Let's suggest that the profit of the subsidiary is 100,000 euro. Then first the federal government siphons off 15,000 euro and another 825 for the solidarity surcharge. Then the city of Berlin takes 14,000 euro to pay for the Berlin-Brandenburg International Airport. If you did not hear about the Berlin-Brandenburg International Airport, please look it up. It will make you laugh and us cry. So this gives a total tax load for the corporation of 29,825 euro. And a profit after tax of 70,175. If now the subsidiary pays this amount as a dividend to the parent company in Israel, the parent company is due to withholding tax. And in my example, this is 18,508, which means there's only a net dividend payment to Israel of 51,666. But there are good news, because the parent company in Israel gets a wide tax credit. And this tax credit is not only for the withholding tax, in my example, 18,000, but also for the taxes that the corporation in Berlin paid itself, the 29,825. And this is, from the German perspective, something is exceptional, and it leads to a very stable tax relationship to both countries. How this works in detail in Israel, Mr. Angel Ophir will explain to you later. But coming back to my client who moved from France to Germany, he did not come because of the taxation of corporations. So next slide is about license fees. Many of you may have heard about Aladdin Knowledge Systems Limited in Tel Aviv. It's a worldwide leader of enterprise security software. And they aren't a client of mine, but I can well imagine how they operate their German subsidiary. The German... Sorry? Yeah, thank you. And I think the subsidiary in Germany takes the raw software from the parent, and the subsidiary in Germany will refine it for the German market. And for this, the subsidiary has to pay license fees. In contrast to dividends, license fees are tax deductible. But there are a lot of rules governing the deductions and the transactions between two countries. This is not only for Germany, but for all of the EU, and I suspect also for Israel. So basically, there has to be an arm's length pricing for transaction between companies who are related, which means applied to the license fees that the payment, the price that the parent company charges has to be the same as if the parties were not related. This is a very complex field, and I would like to be happy to talk to you about it later, to anybody of you, when we have the individual counseling. I just want you to know that you pay attention to the pricing if you want to keep the tax authorities in both countries happy. Let's have a look at my simple calculation here. License fee payment should be 100,000 euro. Because it's tax deductible, we have no tax for the corporation in Germany. We have a withholding tax. Maybe you remember, normally, in general, it's 15% in Germany, but the tax treaty between both countries lowers it down to 5%. So this is not automatic, but let's say that all the conditions are fulfilled. So the net amount for the company in Israel is 95,725. The system for transactions within Europe is much more complicated, but believe me when I say that the fashion designer who moved to Berlin did not come because of this license payments. So the next slide is about loans and interest. Often it happens that the parent company gives a loan to the subsidiary. Again, there are a lot of rules about this works in details. But we can say if the payments are under 1 million euro, the interest payments are tax deductible. So now let's look at the example. Let's say that the 100,000 euro is for interest payments. As I told you, there's no withholding tax for interest payments, so the net amount is 100,000 euro. So since my fashion designer is not worried about loans at all, it's safe to say that he did not come to Germany because of the taxation of loans and interest. Oops, sorry. So finally, let's talk about closing or selling. If a parent company sells the subsidiary and achieves a high price, a good price for the shares, and makes a nice profit, then it's in the tax treaty. The tax treaty says that this profit cannot be taxed in Germany, but of course it's taxable in Israel. And I'm not going into this for my fashion designer. So now finally, if it's not any of the above examples, and it's not the Berliner Currywurst who brought my client to Germany, what was it then? I gave you a hint when I talked about the tax credits that the Israeli company gets in Israel and that are in the tax treaty. What that provides and what my client was looking for was security, not more and not less. In Germany, we have a very stable political environment, and our legal system is transparent. We have had stable tax rates over the years, which is very important for investors. In some countries, tax changes can happen retroactively. For example, in Poland, which means that a tax law that is changed in 2014 can change your taxes of 2013. In Germany, that would not be possible. Many of you may have heard that the French government recently increased the income tax rate up to 75% for income over 1 million. Unbelievable tax changes like this are unthinkable in Germany. The tax authorities have to act as a police in every country, but they don't wear weapons in Germany, as, for example, the Guardia Civil in Italy does. Instead of guns, we have a stable process of appeals and of legal remedies towards the tax office. I think that all of these points may have influenced the 2012 just a minute, survey of Ernst & Young, who labeled Germany as the most attractive country within Europe for direct investments. And so whenever you come to Berlin, please come to my office, because only 1 block from there is the place where the real currywurst was invented, and it would be my pleasure to take you there. Thank you.